Okay, welcome back. Let's do some calls of the day. General Motors today, price target goes to 61 from 53, reiterated buy at Goldman Sachs. Bring it up because yesterday it was reiterated sell by Sarat Sethi on our program, who said he sold it last week, and I want you to listen to his explanation for why.
It's been a horrible investment. The consumer's slowing. You've got a huge amount of supply of autos. It's not just GM, it's Ford, it's everybody else is coming there. I just think you've got peak earnings there, and they're reinvesting so much money into products we don't know if they have a return on investment.
Okay, I wanted you to react to that. He's owned it for years. You know that. Yep. He's defended it at numerous turns, and now just said, I've had enough.
Okay, he's had enough. It's up 38% in a year, and he may have just wanted to say, look, after several years before that of not doing well, I'd rather ring the bell right now and take the bird in the hand. I can understand that. I have to tell you just straight up, and everybody needs to hear me on this, I really don't care what it's done over the last 1, 5, or 10 years. I know a lot of people like to look at the historical performance and say that's what's going to be going forward. I do not believe that.
You don't care what it's done for the last 1, 5, or 10 years?
I don't. It tells me nothing about
what do you
where
own
it's
it
going
for the enjoyment
forward.
of saying you own General Motors stock?
It tells me nothing about where it's going forward. I have to make a decision today to buy, sell, or hold this stock. What it's done tells me nothing about what it's going to do. What tells me what it's going to do is releases like you got today, okay, in which it said that the average transaction price for the third quarter is in line with the second quarter. This is very important, and it may seem like I'm focusing on one detail, but I want to point out at the last quarter, the second quarter earnings report, it was a blowout report. Stock went down. Why? Because people started projecting that average transaction prices were going down. They're not. They're staying flat. The volume came in better than expected. EV sales came in better than expected. So the investments that they're making are starting to pay off. And all this for a stock that trades under 5 times earnings. Look, people can disagree with me. That's fine. People can have different methodology than me. That's fine. But I do not care what it's done over the last 1, 5, or 10 years. It tells me nothing about what it's going to do going forward. I'm holding it because I see better gains than the S&P 500 going forward. If I'm wrong, and we'll discuss it then.
Okay. GE Healthcare. Nothing more needs to be said.
I was like lying.
Wow.
That's it?
Hey, you do you, man. I mean, you do you.
Like, okay.
You tell our viewers what floats your boat, and they make their own decisions.
Moving on.
That's what we do. GE Healthcare, reiterated top pick and a buy. $103 is the price target at Citi. Steph.
Yeah, I think that the third quarter is going to be the low for organic growth at 1%. I think they can get back to mid-single-digit growth. Operating margins can expand between this year and next year, 200 basis points. You have very easy comparisons ahead. Inflation coming down helps their cost structure quite a bit. And China is 13% of their total revenue. So it's had a nice run. It's up 18% year-to-date, up 35% in the past year. Good split from GE so far, but I think there's more to go.
All right, Thermo Fisher, overweight, $680, price target at Stevens. They have unparalleled reach into biopharma customers with a broad portfolio of offerings that support customers from drug discovery to clinical development and commercial production. That's from the note, Carrie. You own this stock.
Yeah, and all that's true. What's happened with the company in the fundamentals is after COVID, where they had billions of dollars of sales because of COVID testing, they had this low where the COVID testing stopped and it wasn't replaced because there was a slowdown because of interest rates and spending for biotech in particular. Well, now interest rates are coming down. We're seeing a resumption of spending, and Thermo is the place to do it. They provide for all of the different operators in the whole biotechnology and pharmaceutical industry, and that's testing and equipment and all types of fundamental processing that you need behind the scenes in drug development. So yes, we think it's a great stock, and next year we believe that sales will begin to accelerate again.
What about HealthEquity? RBC's top idea list for the fourth quarter. $100 is the target. Compelling opportunity as valuation is recently compressed.
Yeah, that's true. So HealthEquity is the largest of the health savings account companies. And this is a growing field where employers offer this to their employees, and your money accumulates there, and you're not paying taxes on it. It's like a 401k plan. So We believe that if employment stays strong, interest rates are not coming down to zero, but they're coming down a little bit. That's fine. As long as the economy keeps growing and more companies are part of this process, that's good for HealthEquity earnings and shares.
So what do you think about Carmax, which JP Morgan has added to its focus list as a short?
Yeah,
as
great.
a short. They're underweight. The target's 65. Recent results continue to show a lack of market share recovery when peers like Carvana are rapidly gaining share at 2 times unit economics.
Yeah, okay, so Carmax has not been a great stock. Let's admit that. However, what we saw in the last quarter is an improvement. We've begun to see used car prices come down. They're now 15% lower than they were at the peak during the pandemic. You know, car prices went way up and you couldn't buy a used car. That started to happen for them. Interest rates are coming down. That is a big factor in the auto sales market. So you have lower car prices, lower interest rates. You have a better environment economically than we've had for years in terms of finding a car. And we think that they have the best on-premises and online platform in which to purchase a used car, and that will be good for them.
Josh, you're not in SharkNinja anymore. Got stopped out in mid-July, but it was initiated, outperformed today, $120 at Oppenheimer. Year to date, I've got it up more than 100%.
Yeah, this is an incredible story. Most of the people watching are familiar with either the Ninja blender or the Shark vacuum cleaner. I think we're on our second Shark vacuum cleaner at home, and it's just the superior product. And the company's got this history of being really good at figuring out what the buyer of these types of everyday appliances really wants, and then engineering to the point where it's the only choice once you start using it. So I missed out on the run here. This is the danger of being too risk averse, sometimes having a stop loss that's a little bit too close to the market price. If you get stopped out and you were right all along, you get to watch other people make money. So that's the story here with me.